We've completed our schedule of cost of goods manufactured. Time to move on to our schedule of cost of goods sold, as well as our income statement, and that'll be the focus of this video. You'll see the schedule of cost of goods sold is really easy. If you followed what we do with inventory accounts, we add beginning inventory, we deduct ending inventory, and we're all set. Our schedule of cost of goods sold is a snap. I should probably stop the video and re-record, but I'm going to keep going. Okay, so we need a title for our schedule of cost of goods sold. Same type of title, Bill's Baggage Company. Instead of schedule of cost of goods manufactured, we're going to call it a schedule of cost of goods sold, and for the year ended December 31st. So, Bill's Baggage Company. We're preparing a schedule of cost of goods sold, and it's for the year ended December 31st, 2012. And I'm just going to zoom back in a little bit here. Okay, so we've got a good title. The schedule of cost of goods sold just tracks the goods that we sold. And so what goods do we sell? We don't sell beginning inventory. We don't sell raw materials. We don't sell WIP. We sell finished goods. So let's track our finished goods. We're going to take our beginning finished goods. We're going to add that to our cost of goods manufactured. We're going to deduct our ending finished goods, and we'll get the amount of stuff that we sold. So we're going to deal with our finished goods inventory. I've put a little line there. And we're going to say our beginning finished goods, we're going to add our cost of goods manufactured, subtotal, deduct our ending finished goods, and we're done. Pretty easy schedule. So, finished goods inventory on January 1st was $21,000. We're going to add cost of goods manufactured. Notice an M there. You don't have to underline that. I was just emphasizing the point. $55,000. So again, if I had $21,000 to start, I manufactured $55,000 more. The goods that I have available for sale my subtotal here is $76,000, and there's all sorts of different names you might read of it as that subtotal, but that's what I call it. Goods available for sale is $76,000. We're going to deduct our ending finished goods here, our finished goods inventory on December 31st. And our finished goods inventory on December 31st was $16,000. So our cost of goods sold, our COGS, 76 minus 16, our cost of goods sold was $60,000. All right, that's it for cost of goods sold. Pretty easy. On to, dollar sign at the top, dollar sign at the bottom, and probably I could have written all these in the right-hand column. Thinking back, I might have wanted to format them that way. These are all totals. They could have been written on the right. Last one, we're going to do an income statement. Income statement starts with the title, Bill's Baggage Company. We're preparing an income statement, and our income statement gets dated for the year ended and the date, December 31st, 2012 in this case. So remember what an income statement is. It's a summary of revenues and expenses. Revenues minus expenses equals net income. An overall format here, though, remember, if we have cost of goods sold, it's sales minus COGS equals gross margin minus selling and admin expenses equals net income before tax minus taxes equals net income. So I know it's a bit of an awkward format I've written out over there, but sales minus cost of goods sold is going to give us our gross margin, our markup, our margin on our product. From there, we deduct our selling and administrative expenses to get our income before taxes. Then we deduct our taxes to get our net income. This is kind of a review from Introduction to Financial Accounting. I've got some videos up there, but you know, this takes it a few steps further. So let's work through it with our given information. So way back up to the top here, our sales was the very top line, $110,000. Okay, so let's fill that in. Sales revenue, $110,000. Our next line down, cost of goods sold. And our cost of goods sold just comes from the previous statement. It was $60,000. So our gross margin, that does say gross, like yucky, is $50,000. 110 minus 60 is 50. We're on to selling and administrative expenses, also often called operating expenses. And let's list out all those other costs that were in the question that we didn't include. So selling and admin expenses, sales commissions, that's, I'll just note as S. Income tax is its own animal. It goes at the very bottom. Reading along, person, no. Depreciation of office, well, that's admin. Utility, no. Admin wages is admin. Utilities office is admin. And I think that's it. So let's list those out. Sales commissions first, and sales commissions were $14,000. Next on the list, admin expense, which was depreciation of office equipment. I forgot the number. Depreciation of office equipment was for $1,000. Should have been able to remember that. Next on our list here is administrative wages, which were $15,000, and utilities office, which was $3,000. So our total selling and admin expenses is $33,000. So take our gross margin minus our selling and admin expenses. That'll give us either our operating income or our income before taxes. I call it income before taxes here. And 50 minus 33 is 17,000. Then we're going to deduct off our income taxes. And our income tax expense was near the top, there it is, $11,000. That brings us down to our bottom line, our net income, and our net income was $6,000. Let's zoom out a little bit and get a look at this statement. Dollar sign at the top of each column, dollar sign at the bottom of the financial statement, and at this point we've got ourselves a good income statement. We can see that this company, Bill's Baggage, made $6,000 last year. Our income statement summarizes revenues and expenses, and it does it in a logical way. So we've completed in this series of videos a schedule of cost of goods manufactured that looks at a summary of materials, labor, and overhead. It does it in a logical way. And remember, we've got to deal with our raw materials inventory and our work in process inventory, our WIP inventory, in this schedule. The next schedule is just a computation of cost of goods sold. In this one, we just deal with finished goods inventory, the beginning and ending, and we add in our cost of goods manufactured, and we're all set. The final statement we learned was the income statement. This is a review of an introduction to financial accounting. You take your revenues minus your expenses, but you organize it in a logical way, and we've done that here. That's it for this series of videos.